Yeah, so Australian equities have an important role to play from three different elements. So firstly, you get income, secondly, you get growth, and then thirdly, you get the diversification benefit. On income, Australian equities really benefit from high dividend payout ratios, which translates to attractive dividend yields on stocks, and you also benefit from the Australian franking credits regime. Secondly, on growth, we have some really high quality growth companies in Australia. If you can succeed and grow from nothing in Australia, which is a smaller market, and get those unit economics that work, you're really well placed to scale that exposure or that model offshore. And we've seen that success with the likes of CSL in the healthcare sector, or Xero or WiseTech in software. And then finally, the diversification benefits. In Australia, our market is more weighted to financials, resources, healthcare than, I'd say, the US, where there's a much bigger tech exposure. So you get those sector exposures, diversifications, and you also get the benefit of geographical diversification, particularly for those businesses which have more exposure into the Asian region than perhaps the US market might offer you. So we've got a couple of key principles. So firstly, it's around our style. We're very core managers, and ensuring that the portfolios we put together are consistent with that style. We don't style drift. Secondly, it's very much around monitoring and performance, so ensuring that we're consistently reviewing the portfolio, understanding the risks that are in the portfolio, and in keeping on top of what's going on with our stocks. Thirdly, it would be around ensuring that we are actively managing the portfolio, and that it translates to how we actively manage our relationships with companies. And then finally, it's really consistency, ensuring that we are consistently doing what we say that we are going to do, and also deliver very consistent performance. We have one of the largest teams in the market, with 19 investment professionals who are very tenured. I think on average our team has about 20 years of experience, and we've got a range of people who have been with the team for their entire careers, through to people who've come in like myself after having a couple of different careers, and that creates a lot of diversity of thought. But the team culture is really key to how we are able to work together. There's a lot of respect amongst the team. We do our daily team meetings. Everyone feels free to challenge each other in a respectful way, which translates to better outcomes. And at the end of it, we walk out of those meetings and have very good personal relationships as well. Yeah, so I'd say that my experience is a little bit different in a couple of different ways. So firstly, I come from a slightly different background, where I started my career first in accounting, then I moved into investment banking, working across Australia, and then over in New York. Secondly, I have a very global experience. I've lived and worked across 5 different continents around the world. I'm very much a generalist by nature, which is very much aligned with the Pendal core approach. And so I think that really adds value, having that broader and more global skill set. I'm always very prepared when I go into meetings, which I think is a sign of respect for management teams, and they always really appreciate the effort and the thoughtfulness of the questions that we as a team present. When I think about risk management, I think about a couple of different things. So firstly, I think ensuring you've got the tools in place to understand what risk is being taken. And particularly if you're delivering a core strategy, as we do, you want to make sure that you do test the portfolio to ensure it's consistent with core. It's not going to be drift stylistically to value or to growth. That's one aspect, is the tools and understanding the risk. The The second aspect is really around then understanding behavioural risks. As a stock analyst, you often get asked, how do you stop yourself from falling in love with companies? I prefer to think about it a little bit differently. I think that every analyst I've ever known typically has one stock which they do fall in love with or have some blind spots on. And so why try to change your behaviours to ensure that doesn't happen? Why not be aware that this is a risk and then put the guardrails in place to ensure that other people are helping you to address those risks? So the Horizon Fund is aligned with the transition to a more sustainable future. And we do that in 3 different ways. So firstly, we have negative exclusions, which look to limit the exposure to companies that may detract from a more sustainable future. Secondly, we look to identify those companies which are enhancing the transition either by the products or services that they sell or the way that they run their business. So are they adopting more sustainable business practices? And then thirdly, it's really about the stewardship and engagement approach. How do we support those companies to do things in a more sustainable way and therefore de-risk their businesses and will continue to be better businesses moving forward. So the fund is designed for those investors who are looking for ethical alignment with their beliefs whilst not sacrificing performance.